Well, for more insights into the market slump and what could be coming next, we're joined by Stephen Bell, the chief economist at GLC. Stephen, welcome.
Good morning.
If we could just start with looking at Spain and what's been happening, the regional banks there, how significant is that?
Well, I think the issue with some of these cajas is not the losses that they represent, which are really quite small, but whether they are a better measure of what the overall Spanish banking system has to suffer. But to be honest, people have priced this in. I mean, the Spanish index, the IBEX, has fallen pretty much further than almost any index this year. The banks themselves have been harder. So I think this is pretty much priced in. It's got more attention because there's a bigger, broader problem with LIBOR funding. LIBOR spreads are kept in by the liquidity schemes at the spot end, but the pricing is for them to widen dramatically by 35 basis points or more over the autumn and the winter, and that would imply a return to really quite a severe squeeze on bank funding. That's feeding this substantial de-risking that's going on, and I really think they have to do something about it. A lot of people are saying the authorities don't need to worry about it, they're keeping the spot tight or narrow, but I think they've got to do something about it further out.
Is that what's driving the sell-off in the Irish banks? I mean, they've been very badly hit today.
I think it is significant part of that issue. When funding gets tight, the peripheral players get hurt more. We've already seen the sovereign issue escalate dramatically, initiated by the Greek problems, but throughout southern Europe. Risk appetites have diminished. Banks' funding pressures are, to my mind, a completely unexpected extra development, because from my point of view, the world economy is improving. Corporates are cash rich, so their customers are in better shape. Things should be getting better. And this is really, I think, related to this Dodd bill, which with hindsight maybe be seen as a really big mistake. And if that's raising the cost of bank funding, which gets passed on to their borrowers, and they reduce the amount of lending, that's just bad news. And they really shouldn't have done that. An own goal.
Right. Now, if we look overall at the equities markets, they are seeing there's significant declines, despite, as you say, corporations being cash rich and actually having got some fairly good earnings figures out. Is this a time to buy?
Well, I'm a bit hesitant because I didn't expect this sell-off. Right. But I do think when things calm down, the fundamental backdrop is very positive. We have good growth in profits, as you say. Inflation is low, and in developed countries, there's loads of spare capacity, loads of upside for further profit growth. And the world economy, there's always something wrong with it somewhere, and the thing that's wrong at the moment is Europe. But even that's not that bad. So actually, I think these are extremely strong economic conditions. And I think once things settle down, we will get a substantial rally. I think we'll go back to the old highs, which, 12, 17 on the S&P, for example. I think we'll get to that level again and see a significant rally in emerging market FX. And the North Korean issue, I mean, North Korea's put itself on a war footing on several occasions.
Indeed.
So I think there'll be a significant recovery, but whether it happens today, I don't know. We're retreating slightly in the face of this sell-off. And
then if we look at what's happening then on the foreign exchange markets, we're seeing a kind of a flight to both gold but also to the US dollar. That's safe havens in a North Korean crisis, is it?
It's funny, isn't it? Only a few months ago, people were saying, oh, the dollar's going to lose its reserve status, ha, ha, ha. So, yes, the dollar's main rival is the euro, and that's under a shadow. And everyone typically flights to the dollar in these times, and US treasuries and the dollar are benefiting substantially from this de-risking.
But then in terms of emerging markets, just very briefly, you don't think that Asia is going to be too badly affected by the Korean crisis?
I really think Asia will bounce back. It's a good, strong fundamental. The stock market's a bit more tricky, but the currencies, I do believe, will see a significant recovery there.
OK. Stephen, thank you very much, as ever.